Hello and welcome to Insider Shot. In this video, we are going to discuss about Zomato's plan for IPO. This video will briefly discuss about what are the future prospects of Zomato, how Zomato has performed in the past, and what Zomato has told its investor about its company in its filing with sebi. So do watch this video till the end, and we'll try to cover all the important points, and in the end we'll also try to give our point of view if one should subscribe to Zomato's IPO or not. Okay, so Zomato has become a very known brand in India. Everyone has come around this term Zomato, and it is a good success story of Indian startup ecosystem. So Zomato started raising money from InfoEdge and Sequoia Capital in November 13, and its latest fundraising of $660 million in December 20 from various financial giants around the world has valued Zomato at $5.4 billion. Okay? So this is the current valuation for Zomato. So InfoEdge, also known as Naukri, which is a listed company in India, is currently the biggest shareholder in Zomato, and this IPO, with this IPO, Zomato is aiming to raise around 8,250 crore rupees, out of which 7,500 will be fresh equity issue, new shares will be issued for that, and the rest 750 crores will be an OFS by InfoEdge, through which they will be exiting from Zomato. So InfoEdge will be selling all its stake in Zomato and will be exiting the company completely. The other shareholders in Zomato after InfoEdge are Ant Financial. So Ant Financial is the financing arm of Chinese giant Alibaba. So after InfoEdge, it will be the biggest shareholder in Zomato. The other shareholders are Uber. So Uber became a shareholder in Zomato after Zomato acquired Uber Eats India. So that was a cash plus stock sale. So Uber got Zomato shares in exchange, and the rest are Tiger Global, Sequoia, and Deepinder Goyal, its founder. So Tiger Global was also an investor, recent investor in December 2020. So the rest of the shareholding is expected to remain the same during the IPO, and this will be one of the biggest boost to Indian startup because Zomato is an early startup in the Indian startup ecosystem. So this will be like a green signal. As we all know, Paytm has also come up with its plan for IPO. So this will be a green signal for most of the other startups to come into the share market to raise money. So this will be very good for the Indian market and Indian investors. So in this slide, we have the key operating metrics which Zomato takes into account to get its forecasts and how its revenue is going to grow or how it's going to plan its future. So the first thing here is average MAU. So this is the monthly average user. This includes the people who use the app and who are not more frequently ordering from their apps. So maybe once or twice in 2-3 months they are using and ordering from the app. So it has had a steady growth, good growth. So this is for the last 3 fiscal years, and the last one is for the 9 months, that is from April 2020 to December 2020. This average MTU is the monthly transacting users. So this is the number of users which are regularly ordering from Zomato, which are doing transactions regularly from Zomato. MTU stands for monthly transacting users. So this has had an exponential growth. From 18 to 19, it has become grown more than 5 times, and it has doubled from 19 to 20. So this is a very good growth, and this growth is expected to continue as Zomato starts penetration in smaller Indian cities, tier 2 and tier 3 Indian cities. Zomato has started penetrating those cities. So this will grow exponentially again in the future, as Zomato has a lot of untapped markets still left for itself. Okay. So an active food delivery restaurants, that are the restaurants which are in registered in Zomato. it has also been growing very good, and this is expected to again double in numbers because after the coronavirus lockdown, many restaurants which were not using Zomato as a delivery partner have started onboarding themselves for Zomato as dine-ins are restricted. So this will also give a good push in the growth for Zomato. So the next metric is GOV. So GOV is a very essential metric. GOV stands for gross order value. That is, in one fiscal year, what was the total value of order which Zomato received? Okay, so we can see there has been a very good growth. This growth is very good. It has been in triple digit and it is expected to be in triple digits in the future as well. Okay, as more people, as more users start coming on Zomato, start using their services, the order value will keep on increasing, which will help Zomato to increase its revenue and finally in the future come into the green, that is come into profitability. The total income has been very good as well. It is near to 100% growth in the last two fiscal years. This fiscal year, this may not grow as much because of the first 3 quarters coronavirus induced lockdowns, but the total income is very much expected to increase in triple digits going here from further from this after this its IPO. So why the total income is going to be a little less this year is because you can see in this picture, this is GOV, gross order value. So there was a very sharp decline in order value. This was the first quarter of this financial year. So there was a very sharp decline due to the lockdowns where people mostly moved back to their hometowns or preferred eating at home. So there was a very sharp around 100% decline in gross order value. But after the lockdowns were lifted and people started eating food outside or ordering food from outside, there was a very good decline and it has actually gone above the pre-COVID levels. So these were the 27,000 and 26 around. It has gone above the average of its pre-COVID level, which is a good sign for the company going further that it is able to rapidly come back from the decrease which it had. So this will keep on growing further ahead. As I said, once there are more customers start onboarding, more cities are penetrated by Zomato. So currently Zomato is functioning in 24 countries with over 10,000 cities it is serving, and it has plans to expand further as well. So the GOV is going to increase. So in this slide, what you can see are what Zomato call unit economics. This was the most talked about topic once Zomato announced its plan for IPO. So in this picture, what you see is the last fiscal year, that is 2019 and 2020. This shows what Zomato earned in one order and how much it lost in per order. So this, whatever you are seeing, is per order. Okay. So the first is commission and other charges. So whatever order you go and purchase from Zomato, Zomato charges a certain amount of commission from the restaurant as a part of facilitating between two people. So during the last fiscal year, it was 43 rupees point 6. 43.6 rupees was an average per order commission that Zomato was earning. It was earning 15.3 rupees from delivering per order. That was basically the delivery charges. It was spending 52 rupees on delivery cost, that is to the delivery boys, the petrol and their expenses. 21.7 was the discount, that was the coupon codes which you get on Zomato when you order. So there is normally always a discount of 10, 20, most of the time 50% as well. So it was spending 21 rupees as a discount on per order. 15 rupees was other variable cost which it was incurring. So during the last fiscal year, after all this calculations, Zomato was losing 30.5 rupees per order. On per order that Zomato received last fiscal year, it was losing money, it was burning cash, which has now changed. So in the 9 months ended last year, that is from April 2020 to December 2020, Zomato was able to come in the green, that they were able to earn money on per order. That was basically because of the increase in commissions and delivery charges. The commission and delivery charges, as compared to last fiscal, the commissions came to 62.8 rupees per order against 43 rupees, and the delivery charges increased to close to 27 rupees. So there was a good increase in these two metrics as compared to last fiscal year. Zomato was able to cut down on its delivery cost, that is paid to its delivery boys basically. On discount side as well, Zomato was able to, this came down 3 times, as you can see, 21 to 7 rupees, and Zomato is expecting to keep it this around this cost only. The variable cost was around the same price, but what the increase in commissions and delivery charges helped was to get Zomato in the green, and they have started earning close to 23 rupees per order. Okay, so this 23 rupees is excluding all the marketing and overhead costs that Zomato incurs. But on the basic front, to take one order from the restaurant and deliver it to the customer, from this fiscal year, Zomato has started to earn money on that, which they were losing earlier. So this is a good sign, and this commission, delivery charge, and further as the company grows further, it takes more cost cutting measures. This contribution or profit which Zomato is calling it, this will definitely go up, and which will be a good sign for the investors. Okay, so now in the previous slide, as we discussed how Zomato has come into the green. So the main reason for Zomato to come into the green, that they have started earning per order, is the increase in average order size. Okay, so pre-COVID, the average order size was around 264 rupees, which has increased to 400 rupees. So the why the order size has increased, that is because most people are opting to eat at their home, not go out in the crowd because of the coronavirus lockdowns, and restaurants have not been able to operate in their full capacity after the first nationwide lockdown. So this has increased Zomato's order size, because now families are also opting to eat at home rather than dine outside. So this has increased order values and order sizes. So what this has helped in Zomato to earn more, how this has helped, because to deliver an order, even if that order is for 100 rupees or even if that order is for 1000 rupees, Zomato will spend the same amount to deliver that order. But if that order is for more amount, of a higher amount size, Zomato will earn more commission on that order. Okay, and the other reason for the order size or the average order size going up is because earlier what used to happen, that the premium restaurants were only dine-in. Most of the premium restaurant, as per my experience as well, they were not signed up with Zomato and they didn't deliver through Zomato. So after the lockdowns and the coronavirus, people have started eating at their home, and now these premium restaurants have also signed up for Zomato. So anyone who is ordering from these restaurants, their order size is big as compared to small restaurants. So this has also has been a factor in increasing the average order size, and this average order size is expected to keep on increasing as people are still skeptical about heading out right now. Even after the second wave, people have become more cautious. So I don't see in the near future people going out in big numbers to dine. So this will be a very good point for Zomato. So despite all this coming in the green this fiscal year, if we talk about the last 3 years, Zomato has been in very big losses. Its losses has multiplied very humongously. So you can see from 1718 to 1920, from 106 crores losses have went up to 2300 crores. This loss is for the last 9 months before it filed for an IPO. So Zomato has openly said in its filing also that they are going to go into aggressive marketing mode, market its products more, and start using the cash which it will receive from the IPO more aggressively to gain a lion shares of the market. So they are not expecting to turn profitable anytime soon, but they have not. What I like from their side is that they have not hidden this from their investor, that what their plan is, that they first want to get that big share of the market and then go into profitably. They are going to reduce these losses, but they don't expect themselves to come into profit very soon. Okay, so there are a lot of articles and a lot of brokerages have also given their review that after this IPO, Zomato will have close to 14,000 crore in cash. So this will be a good cushion for Zomato. So even if it goes on making a loss for a few years, it can sustain itself. But Zomato has already given out its plan that they want to use this money to get into aggressive marketing and use this money to give their customers more discount and basically get an edge over the competition. So what Zomato will have a very good first mover advantage since it is coming into the market to raise money. It will have a good cash cushion and you can see a good war chest. So as we can see in this picture, anyway Zomato is ahead of Swiggy in its revenue and its customer base. So this will give a Zomato an edge over its biggest competitor, that is Swiggy, and it can basically use this money to push Swiggy out of the market and gain a good chunk of share in the market, which will be very beneficial and which will help company to turn profitable in the future. So here we have the consolidated statement of profit and loss. This is just a brief show of what I have already told you, that the company has been able to increase its income. Like you see, from the March 2019 to March 2020, its income has basically doubled, but the company has not been able to come into the green and it is not expected to post profits anytime soon. And this has been mentioned by them in their DHRP that they first expect to gain a good market share. They will be trying to reduce this loss. They will try to cut up a lot of costs, but we are not going to see the company in profit in the near term. But if according to us, this will not be a big problem for the company because they have a cash cushion right now. But since Zomato will be first of its kind to come into the market, this will attract a lot of attention from various investors. So, for example, a lot of tech funds like ICICI Technology Direct Fund, which is a mutual fund which invests in tech companies, will be investing in this company. So, Zomato will definitely get an eye of a lot of investors, and this IPO will open doors for other startups to come into the market. And we are expecting a lot of new startups. Paytm has already announced its IPO. We'll come out with a review of Paytm as well once it files its DHRP with sebi. And if you like this video, do share it with your friends and subscribe to our channel. We'll come out with more analysis. Thank you.